everyone. How you doing? This is Rafael Mendoza. I'm with Pinnacle Financial. Today, we will be just discussing brief options that you might have and ways to shop your supplemental carriers. So this is just the Pinnacle website here. We try to make it pretty simple when it comes to supplemental carriers, how to shop for them. You go to the pfsinsurance.com. We give our agents a login, and we go right ahead. You go into the Medicare option here, and once you click on Medicare, you're going to get a several options on what you're going to quote for. Then we would just click on right here where it says click for a Medicare quote. You'll be able to quote supplemental carriers that we offer. Now, because it's the annual enrollment period, this would be a great time, especially when clients are sick and tired of having doctors drop or their co-pays being raised. So you could always offer an alternative. As we all know, with Medicare, there are two choices that they have: either Medicare Advantage or a Medicare supplement with a standalone Part D. This is just another option that you could have for them. Obviously, in certain states, it is underwriting that you would have to do. But as long as they haven't been hospitalized, a lot of the times that we've seen and specific medications, they will get approved. Now, the carriers themselves give you these prescriptions that automatically, more than likely, they'll just deny the client. But it's, in my opinion, is worth a shot. What's the worst that could happen? You do have several letters. You have your letter K, L, G, N as in Nancy, and these supplement plans are all the same with all the carriers. So you really just are comparing uh, copays, because a letter N is the same letter N for ARP, for Mutual of Omaha, for Aetna, Cigna, Humana, for Aflac. There's really not going to be one difference when it comes to one carrier or the other. Uh, so here, like I mentioned, this is the quoting system that we'll have all the carriers here, and we'll pretty much, you hit supplement, run a quote. Once you run a quote, you type in whatever zip codes. If there's anyone online that want to just drop a zip code there, you could drop one for me and I could enter it so that we can see the rates in that area. So I have one here. Thank you, Brian. We have 07470. Okay, one moment. That's in Passaic. I put female, 65, Plan G. Just getting that quote for me in a second. So here we have in Wayne, New Jersey, right, Passaic County. If she's a female and is 65 years old, the first one that comes up is Bankers Fidelity at $140 a month. And again, they all pretty much the same coverage because it's Plan G. So we're just going to compare. The one thing that I would like to draw your attention is you want to see how many years have they been in the market. So therefore, that you pretty much are dealing with a carrier, or should I say a company, that is stable and not going to be uh, switching their rates as often. The other one, you see the second best rating is Aflac. Uh, that's at 143. You have Allstate at 144. You have Humana at 147. Cigna at 147 as well. And just you keep going down the line. Obviously, you have Mutual of Omaha, which is they're under United World Life, which is 153. And just keep scrolling down. You have the ARP one, 156. You have the Humana Achieve. That is another class rating for Humana, which tends to, depending on how you compare they might give easier on the underwriting. So if you notice here, it says rating class, says achieve, and then standard, and then one of them said preferred. So that means they'll be a little bit more uh, hard on the underwriting. But if they're turning 65, obviously, or coming off of group coverage, then those are guaranteed renewals. I mean, I'm sorry, guaranteed issued. And as you can see, all of these carriers is what we have here. You have your bank, you have your signature. So you have bankers again, but this one is at the standard rating. So normally, just like a life insurance policy, you have preferred rating and then you have standard, meaning they're still willing to insure her. It's just that because of the health condition, they just charge a higher premium. And then you have your ARPs. Obviously, ARP, as you can see, they have this one at a 438, but it is level two, meaning this person can be with much could have a lot less of more conditions when it comes to health, whether maybe they've taken more drugs or they've been hospitalized. They're still willing to cover her. It's just going to be at a higher monthly premium. Now, within these carriers, there are certain ones that are doing promotions. If you do uh, like United Healthcare recently came out with in certain states, and I urge you guys, if you are interested and you do lean more towards this clientele, one thing that we've noticed, obviously, we don't push anyone to any specific carrier. I'm sorry, any specific plan, whether it's Medicare Advantage or sub. They really pretty much tell you, excuse me, based on their need, what is really what they're looking for. But what we've noticed, obviously, higher income folks tend to not really care about a premium, knowing that they could afford it and they could go to any doctors. So that's really obviously one of the pool of people that you're going to be seeing that would get into these supplements is those that uh, income is not a problem. They tend to travel a lot, or they go to your specialized hospitals that do not take any Medicare Advantage. Uh, Mayo Clinic could be one, Sloan Kettering could be another. These are hospitals that say, hey, we do not accept Medicare Advantages, and even with a PPO, we don't accept it. So at that point, the only alternative that you can give them would be a supplemental plan. Unfortunate, depending on their state. If they're going to it because they've just been diagnosed and they just had a underlying issue, then they're going to be more difficult to get approved for certain letters. Like in New Jersey, if I'm not mistaken, uh, uh, letter D, as in David, is like a guaranteed issue uh, plan, but of course, the premiums is tripled than what you see right here. But there are options. You're not they won't be stuck. It's just that it is a much higher premium. So like I mentioned, a lot of folks that are higher income tend to lean this way. They have no problem paying 24, $3,000 a year in supplement, knowing that they could go to any doctor as long as they accept Medicare. And then Plan G has no additional copays, but just that one-time deductible of the year for the medical. Uh, you have another option where you could select plan N as in Nancy. So N is same as a supplement, but you would have to, let me just show you here. Let's pull up plan N. So you'll see the difference in ratings here. So would be a G, right? A G means that the person only has to pay that premium and the 280 in deductible for the medical, and then at that from that point forward, it doesn't matter how many doctors she sees, zero copays, how many times they go into the hospital, zero MRIs, all that will be zero, just a premium that will be paid. Letter N as in Nancy will pay as well, but first they have to pay a deductible. The same 280 as Plan G for the medical, and then they would have to pay the first $20 at any doctor that they go to. But because of that, they are they have only, and you saw from 144, you could offer this Cigna plan for $99 a month. So it is a $45 savings, and then all they have to do is spend $20 at each doctor that they go to, whether he's a specialist or a primary care. You just got to lay out the $20, which is which is huge when the person say, "Well, I only go to the doctor one time every 3 months," so the math works, right? Where that means that you're saving $45 a month, and you're only going to pay out 20. So you might have the reverse where you see the person saying, "No, I go to 3 doctors a month, 3 to 4 doctors a month." At that point, you're saying to yourself, well, letter N might not work because based on your age, and if you're going 3 times to the doctor, that's 60. So that $99 plus the 60 in copays, you're at 160 a month. Might as well, Mrs. Smith, let's do Plan G, where there's no more $20 copays, and you just lay out the 145. Uh, so that's more or less how do you compare, engage in putting your client in the right supplemental carrier. But the key here is to know that all these carriers have the same letter, and we're really shopping for premiums. The other thing is you might want to see, are they discounts for households? So if it's husband and wife, then you're able to get them a discount. Uh, let's see, when you do plan details, then as you can see, these are the details within the plans. And pretty much, if you clicked on this one, that's going to be the same plan detail with all of them. So you're not going to get misguided on that. See, hospital, uh, they don't pay anything. But if they go to the medical portion, which is the Part B portion, see, after your deductible, you have to lay out $20 for every doctor visit. And then emergency room is 50. Now, I do want to draw your attention. If you notice here, it says up to 20, meaning there might be a primary doctor where the balance, it's not the full 20 because the carrier, I'm sorry, Medicare already paid 80%, and what's left over, it might be $12. It might be $9. So they would get billed that $9 or $12. It's not a guaranteed 20. Where the 20 comes in, in most cases, is when they're seeing specialists. A specialist tends to have a balance of over $20 after the 80% coverage that Medicare pays. So with a plan N and this zip code, and if anyone has another zip code you want me to search, just because you're curious to know who is uh, who is competitive in your region, just shoot me a quick on the questions. You could just enter it there, and I could go ahead and just confirm. Okay, so we have 19076. So I'll put that zip code here. So we have Prospect Park, PA. That's in Delaware County. I'll use the same here. So Cigna has the same premium there as well. So let's see if we go to G if it changes a bit. So here you have Precision Mutual. It's a great great company, great product. They're new in the market, which is awesome because like anything else, it's competition. They want some lives in their book, so they're going to get you a great rating. And they're not new; they're just new NPA. So this is a great carrier for if you wanted to get it. It's easy to contract. Uh, there's no AHIP needed for supplemental products. As long as you have your health license, you could just request it. We'll shoot you a link. You enter your banking and background info, and then you'll get a writing number shortly after. So it's a lot smoother process, a lot easier. A lot of financial planners like having this set up for the simple fact that they don't have to worry about AHIPs, and they deal with a lot more higher income folks. So as they are working with their finances, they can easily just budget them into, as you can see here, $125 premium. And then you could go ahead and do a part D. And some financial guys or even property and casualty agents just say, hey, call Medicare directly. They'll get you set up for a jerk plan. But I could definitely set you up with this. And the good thing with these, they pretty much are uh, uh, they are book consistent, meaning they're gonna stay in your book. There is no shopping. There is no every year they're gonna see what's the less copay. You might get a call if from one year to another there's the premium rate just went up by 40%, which by the way, we've never seen such a thing. Now they do raise on average, but it's nothing that's astronomical. And if that is the case, then fairly good health, we could go right ahead and shop with for another carrier, or more importantly, within the carrier, during the anniversary uh, uh, date, they're able to, change or upgrade plans. They could also downgrade. So if they took a G and now G went up, 5 years later, G went up to 280, then let's see what letter N is in that in for the same carrier, and there's no underwriting that's needed. So you have Precision Mutual, that's 126.30. You also have Allstate uh, at 133. You have Cigna at 144, which it's a higher rating. I mean, it's basically what is yep, same rate class as the rest. Humana 148. So if you notice, it's really not much different. The big jump is this one, right? 126. Then within the next 4 or 5 carriers is in the 140s. You do have your Aflac at the 153. Nassau Life is 157. But the bigger thing is you do have every carrier wanting to get some of this in their book of business. So they try to compete with each other. Medicos 169, Mutual of Omaha 175. So yeah, I mean, this is definitely something that you need in your arsenal, in your portfolio of offerings, because you don't want to pigeonhole the client in only a Medicare Advantage, whether even if it's a PPO. Now, when it comes to commission rates, normally it's within 21 to 23% on the annual premium. So if you take this annual premium of 126 times it by 12, and you roughly at 22%. Some carriers start at 23, and then when it goes from there, they normally pay out about 10 to 11 years payment in residual income. The good thing with these, like I said, folks, once you put them in this plan, you're not going to have to worry every year to get a call from a client that a doctor dropped or they're not covering it for a specific uh, uh, a specific procedure, because as long as Medicare is paying for the claim, because they're the primary, the supplement will be picking up. There's never a case where Medicare paid for the service and then the supplement denied the 20%. That wouldn't be the case. Medicare is the actual takes the lead on whether claims are paid or denied. So a lot of folks, especially over the phone, they like doing supplement because it's cut and dry. This is your premium. This is the actual plan structure, whether when you pay the deductibles or to 20%, and then that's it. So another plan that uh, I like to just have your agents, my brokers and agencies to think outside of the box would be a plan letter K. Letter K, again, it's a supplement like all the rest. It's just that it's structured different. So you do have to pay the deductibles, but when it comes to the doctor visits, instead of paying like Plan N, where it's just $20 flat fee, or Plan G, where it's zero, they will pay 50% of the 20, meaning they only pay 10% of the claim. 10% of doctors' claims, if most of us seen explanation of benefits, is on average what a copay looks like. So they could get a plan, as you can see here, for $65 a month and pay and get any network that they want, any doctor offices that they want to go to, any hospitals that they want to go to, and only pay 10%. The reason why that's that's a great deal. If you look at your Medicare Advantages on average has a $40 copay, depending on the state, of course. But on average, it could be a $45 copay, $50 copay. They go out of network is $60. You won't be paying those amount of money when it's 10%, because it's 10% of the allowed Medicare rate. So the doctor bill's 250, Medicare allows 120, then you're paying 10% of the 120. So that's $12, right? And now the hospitalization you would pay, I'm going to show you here, you would pay 50% of that coinsurance. Oh, so 50% of the coinsurance, it's 860, I'm sorry, of the deductible for the hospital, it's $816. So basically, you can let the client know, you know, once if you go into a hospital, you pay a deductible of 816, and then that's it. They all would they all wouldn't mind paying $816, and whether they're there for 1 day or 60 days, it's only the $816. And then when it comes to the medical, it could look confusing, but after you pay your deductible of 240, you pay 10% of the, you pay 10% basically. So 10% on what? On the Medicare allowed rate. And we all know Medicare negotiates all the rates. So the doctor could say this doctor visit is $750. You went to a cardiologist, an example. But that $750, then Medicare negotiated the rate and they only paid him 400. Then that's only a $40 copay. And they're paying, because remember, what you're really doing here is you're giving this to a client that is so worried about what happens if my doctor doesn't take the plan. Well, you go to any doctor that takes Medicare, you're good. You only got to pay $65 a month. And again, you could enroll them in a Part D, or just tell them call Medicare and enroll in a Part D themselves. And at that point, the client is only going to be paying under $100. Now, obviously, they take a lot of drugs. They might go for the $113 United plan, an example. Okay, but for under 70, they could go to any doctor, just pay 10% of the doctor visit, and only $800 when they go into medical. That really is a no-brainer. And most of the time, the people that my agents and agencies have mentioned to me, the facilities, an example, chemotherapies, the 10% they don't even bill because they already got 90% of the bill. So this is just another alternative that you can consider if you do have clients that like the best of both worlds. They like going to any doctor. They like, they have specialty hospitals that they need to go see. Some of them need to go see them just once a year. So why put yourself in a position and paying 175 a month or whatever premium they got into for a plan G or an N when you could go, I call this like a hybrid type of a PPO. You could pay 65 a month and just go right ahead and just pay the co-pays. Just pay the 10%. And anyone that you ask, they willing to lay out the $800 in a hospital and they don't have to pay anything else. That's a pretty uh reasonable offer, knowing that most hospitals stay just by going in, they have to pay over, they see the bills. It's like 25,000. They bill $200 for a Tylenol. So most people say 816 and that's it. 816, that's it. Doesn't matter anesthesia, doesn't matter surgeon. Everything is covered, just 816. So that's an alternative for you guys to just have again in your toolbox. Know the lay of the land. How is it that I can give options to my clients and not have them feel like all I'm doing is pushing them into an HMO or a PPO? You could offer some type of alternative for them. Any of these products that you see that as carriers, and you feel that you should have it as an offering. If you notice, uh, Aflac came up, Allstate came up, Precision Mutual came up as an option. If you don't have them, please feel free. You can go ahead and I'll show you here. Once you go into, let's see, questionnaire, this is how you contract with us. If you're already with us, you could go ahead and just submit a contract. Let me see if I could just share this with you guys, share it in the link here. So there you go. I just put in the chat box an actual the link to the contracting. You just fill it out, click on the carrier that you saw, whether it's Physician Mutual, Allstate, or Aflac, and just if you're working with someone at Pinnacle, they would automatically see this coming in, and they'll go ahead and uh, send you out the contract link. If you're not, under the comment, there's a section here that says comments, or should I say message. So once you click on something right here where it says message, just type in my name. I'm Rafael. I'll type it in the box here. Rafael Mendoza, sales director. That means that I'll know that you just submitted this, and I'll go ahead and get this processed for you. Uh, so yeah, I mean, our goal here is to help you be equipped to when you're out there speaking with your clients, that you have all the possible options that they could get into, and not only that, but you also have the best available alternatives when even within the supplement. Do I offer them a K? Do I offer them a G, an N? Normally, those are the three. See the K, GN. There are plans out there like your high deductible F, which is another alternative. High deductible F is, I'm sorry, not F, high deductible G. High deductible G means you first pay all of your, that's $45. A lot of higher net worth folks understand the math and they know, you know what, I'll go with a high deductible plan and I'll pay it when I need it. And the most you'll pay is $2,800, which is your deductible. for the hot part A, and then the part B is another. I'm sorry, it's $2,800 altogether. So basically, once you lay out $2,800 in services, you no longer pay for anything else. If you look at all your Medicare Advantages and all your PPO plans, again, depending on the state, Arizona, Florida, there's certain states that are unique. Washington State is a little unique because some plans are out there with like a $500 max or $1,000 max out of pocket. But for the most case, a lot of the Medicare Advantages has a max of $10,000 in and out. I've seen 7,500 for an HMO. So if that's the case, this person does the math and they're saying $44 a month and 2,800 and everything is covered and I go any network, I'll take that. The healthier people figured out, well, what happens if I don't go to the doctor that's worth 2,800? And they're right. If they go to specialists and after paying the 240, their 20% is like 60 to $70. Once again, that's still a better option because they're only going to the doctor 4 times a year at $70 a pop because that's the 20%. So that's already 280 plus another 240. They 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 love this plan. And the whole point of insurance is for the what if, right? Or should I say the worst case? Worst case scenario, all I lay out is 2,800. I get cancer, God forbid. I'm in the hospital for 3 weeks. I got to get a triple bypass. All I got to lay out is 2,800. That's not bad comparing to the $300,000 worth of work that they just got done. And that's what a high deductible plan would do. And most folks that are in higher income bracket, this is just a no-brainer. Or let's reverse that. They're used to having an employer plan where it was high deductible, or they just had an ACA and they had a deductible of $5,000 to begin with. So here they are 5,000 plus they didn't have to pay their copays. Here, they only got to lay out 2,800 and no more copays, no more co-insurance or deductibles. So this is something that I would definitely have you guys aware of, that it's in your toolbox where you could do HMO, PPO, supplement, and within the supplement you could go K, you could go F, and then you could go, your typical G or N plan. The reason why we want to equip you with this is because not every broker that's out there or every agencies that are out there are having a structured and listening to the actual client and offering the plan that they need, right? If you hear them out and you hear them exactly what they're saying, they might be telling you, I could care less about insurance. I just want to make sure that I don't lose the hospital that I went to at once. I went to Cleveland or I went to Mayo, and I'm tired of uh, able to go, but then I can't see X amount, X specialists, right? Hospital special surgery if you're in New York City. And so when you hear that, and you could say, well, how often do you go? Oh, I only go like 3 times a year. Oh, wait a second. So you only go to your primary once, and and you're just worried about what if? Well, what happens if you get a $44 plan a month, and worst case is 2,800 that will cost you? A lot of them says that's exactly what I want. So uh, again, it's our job to make sure that we know the options. And once we know the options, is to dive deeper within the plan offerings with a supplement so we could go ahead and satisfy their need and eventually just get referrals out of them. You could feel more comfortable if you have partnerships with financial planners. A lot of the financial planners are just worried that you as an agent are just slam dunking them in a Medicare Advantage when he knows, hey, I got a high net worth client here. I'm managing $10,000. I mean, $10 million. I'm managing $3 million in assets. I can't have you not do the right thing because you just want your commission, right? Now you create a great partnership, letting them know, hey, I get it. Let's satisfy that client need. Now it opens up the doors because eventually people are going to tell you, you know what? No, I like that PPO. I like that is zero premium and I get gym and I get prescriptions and you give me over the counter. Like I'd rather that. But in the end, you just want to have an option for all your clients that you sit with. And more importantly, if you're out there in the community for your other businesses that you're partnering up with, whether it's a PNC, whether it's an accountant, you want to have these type of options, these type of offerings. But this is pretty much what we wanted you guys to hear. We wanted you to at least understand the more or less how the supplement works. How do you pivot, and to who necessarily do you pivot to? Uh, I just went ahead and I entered the Pinnacle's link so that you could contract with any specific carriers that you're looking for. Uh, whether have you noticed Bankers is one of them. So it's like, hey, I want this $44 Bankers product in my pocket. Then just fill out that contract, put my name as the director. I'll go ahead and shoot that contract for you. That way it doesn't sit in our sales queue not knowing who submitted it. If you're already working with a director, please feel free to give him a call directly and he'll go ahead and get you set up. But if anything, I'm going to leave you here also my email so that you can contact me directly if you wanted to just chat a little bit more and get specific questions answered. Is there any questions? Please feel free to drop it in the question. Yes, the underwriting does requirements do vary with carriers. So if you noticed, a lot of times, depending on the prescriptions that the uh, uh, the client has, is going to be whether one carrier versus the other is better. What I suggest is put the claim. Obviously, you do not promise the client that she's approved. The good thing with a supplement is that they have to cancel the supplement themselves. So you could apply for the new one, let it be approved, and then you could tell them, okay, Mrs. Jones, go ahead and cancel out your other your other plan. And if you just want to know uh, which one is better, you come into our quoting system, go by premiums. An example, Bankers is one, Cigna is another, and then just fill it out and submit it. They'll let you know, and you just have, full transparency with the client. This banker is going to be the one that I feel like you should get because of the premium, the $6 difference. But we have to make sure that they would approve it. Let's make sure it's approved. Then you could cancel out the other plan. And again, there's no enrollment period. If you only switch in supplements to supplements, there's no enrollment period. Give it a shot, especially these neo carriers that are interested in gaining some traction in that market space. uh, you could go right ahead and just, hey, you know what? This might work for you. Let's give it a shot. I know United recently stated they're doing a bonus plan for brokers. So on top of your regular commission, they also will be paying like $150 per supplement submitted. Uh, in Florida, Florida Blue is paying $450 on top for a supplement plan. It becomes lucrative, folks, especially when you're dealing with turning 65s, and it's a lot easier to sell these plans. A lot of my agents that are doing telesales, it's just easier. Oh, I don't know if my doctor's in it. There's no network, man. As long as Medicare is accepted. Really? Yes. Okay. It becomes, Yes, is it less than a Medicare Advantage payout if they're T65s? Absolutely, but if you could close 10 a day, or of course I'm giving you the best case scenario, but if you could close them faster and jump on another call and get another one, you'll be surprised. You also want to diversify your book. You don't want 100, if you have a client book of 500, it would be real healthy not to have all 500 in a Medicare Advantage. Now, granted, we all know if that's the best plan for them, why not? I agree with you. But chances are you could probably add a quarter of that into a supplement. You always want to diversify it and put them in each bucket just because you just don't know. And then with this folks, you get a dental sale. Then you sell them a dental plan because obviously it's not a Medicare Advantage, so they're not going to get dental. And a lot of these dentals would include vision. So now you have two things that you could offer that client. Where you get a little bit more. It's a lot easier to tack on, and then there's no CMS uh, scope of appointments or call recording if you only doing sup. The minute you start talking about drugs, now that's Part D. Now CMS is involved, so that's a whole different ballgame. Yeah, so like I said, I wouldn't stress out that you need to know who would get approved or not. It's as simple as, hey, Mr. and Mrs. Smith, it looks like three of these carriers are pretty aggressive in premiums. They all going to cover the same way. Let's do this. Let's go with the A premium. And by the way, I have your info. I could go ahead and apply it to the other one. If this one denied, I'll keep you posted. Give me 5 to 7 days. Let's see what we could do. And it's that simple. Number one, they see that you do have their best interests at heart, and you're willing to just help them out any which way possible. We're about to just wrap up. Again, folks, sorry for the delay. I got tied up. I had some tech issues, like always. When it's time, my computer was working fine, and last minute, then it just started glitching on me. But glad you guys was able to stay on and listen to some good advice on having your portfolio rounded out with your health coverages, and hopefully I planted a little seed there on why it's important is get your additional dental carriers, and also uh, even if it comes to hospital indemnities as well. uh, why not? You give someone $30 more and they'll give you a $1,500 payout to supplement that $2,800 deductible. Some people will do that. That's 75 dollars a month, and in essence I don't have to lay out the 2,800 because the 2,800 was the out-of-pocket max. No, right? You have a hospital indemnity when technically, no, you don't. So, yeah, it's definitely nice ways where you can just help your clients sleep better at night, and also you maximizing the best possible coverage they can have for the least amount of money. Awesome. Well, good stuff, folks. I really do appreciate you sticking through. I hope you got something out of it. If you have any questions, I just dropped my email address in the chat. And if you need the contract itself for any of these products, Precision Mutual, Allstate, Aflac, feel free. I also dropped it in the chat. The website where you click on it, click on the carrier, and then just drop my name in the message there, so that I know that you just did it, and I can shoot that out to you guys. Shoot the link out. But if there's no other questions, please feel free to just check in with us. We will continue to do more seminars and get you guys equipped out there to just separate yourself from the pack. Have a blessed day. For those that are on the call and Veterans Day, thank you for your service. You have a blessed day, all.
Don't forget to subscribe to catch the latest news in insurance and agent training. See you in the next video.